Okay, so let's talk about the concepts that I use that include liquidity. So these concepts is what's going to help you identify where the market is going, where to enter, so area of interest, but it also gives you an identity of what's going on in the markets. So let's get right into this and check it out. So there's four different types of concepts that I like to use when it comes to liquidity, and I'm going to break every single one of them down. Every single one of these concepts give us different information. So we're going to be speaking about hourly highs and lows, daily highs and lows, session highs and lows, and fundamental highs and lows. So what we're going to do is we're going to break it down. I'm going to first talk about session highs and lows because that's the most important for me. And then we're going to go on to the hourly, daily, and then we'll talk about lastly the fundamental highs and lows as well. So let's talk about the session highs and lows and why it's important. Now, there's three sessions. You got Asian session, you got London session, and New York session. Now, for me, these are very, very important sessions because these sessions are going to determine when I am trading, but not only that, it's going to determine if I'm going to be placing a trade or not. So let's draw out our sessions real quick. I'll just draw out right here. We'll draw three lines. So we got, let's say, we've got these three sessions right here. I usually trade New York sessions, so we're gonna go based on New York session. But let's just say we had Asian session play out. So let's say Asian session is on this uptrend right here, like this. Let's say now London session comes up and manipulates these highs and starts to make its way down. Okay, what are we looking for in this situation? Well, what we're looking to see is we're looking to see what price does at these highs and session lows, as you can see over here. Okay, let me actually make this a little bit more clear. So what we're trying to see is we're trying to see what does price do between these highs and these lows. Now, if it decides to come down and manipulate these lows, guess where we're going to be going? We're going to be going up. And when I say manipulate these lows, I mean take out these lows and reverse, exactly what we spoke about yesterday. So again, if we had Asian session, we would drop Asian session highs, Asian session lows. Now, how do we work out highs and lows? Let's say the session was like this, went up like this, and then went low like this. How would we know what's the high? Well, the high would be the highest point right here, and the low would be this lowest point right here. Okay. Now, let's say price manipulates these lows right here, and we then see price pushing upwards. Guess where we're going to be going? We're going to be trying to go up, targeting the opposite end, which is the highs. Does it make sense? So if we manipulate the lows of a session, of the previous session, we're most likely going to go to the opposite side, which is the highs. And I like to make session highs and session lows, or just highs and lows in general, and these concepts. I like to use the thought of these highs and lows are like a magnet. And so if we've just taken out this magnet, where do you think the market's going to go next? It's probably going to go to this magnet right here. And that's why I like to kind of have that kind of idea in my head, because it makes it more sense for me to understand. So again, let's say this time around, price doesn't manipulate the lows, it manipulates the highs. Guess what's going to happen? We're most likely going to try and see price go downwards. Again, when I say manipulate, I want to see some sort of bearish reaction out of those highs, taking out these highs, then reversing and going to the lows. That's exactly what I'm trying to see. That's exactly what I am trying to notice when it comes to highs and lows of the session. Okay, so again, it's very, very important when you're drawing out. Let's say we had now London session in place like this. Now, I trade New York session, so I will still draw up Asian session highs, Asian session lows. Then we've got London lows right here, and then we've got London highs right here. Now, in this case, let's say price manipulates these highs, and we're going down. Guess what I'm going to target? London lows and Asian highs. So I've got two targets right here. That is what I'm targeting. Why? Because most likely price is continuing the downtrend. Look at this. We've got a high right here. Then we've got a high right here. Price is most likely going to continue to go in the downtrend. So let's look at the charts and let's put that on the charts so I can show you. So I like to do this on the hourly chart. I only use 2 time frames, hourly and 5 minutes, and all the other concepts I'll explain to you which time frames are. Session highs and lows, I like to do it on the hourly. Okay, some people like to do it on different time frames. For me, it is the hourly. Okay, so what I like to do is get my vertical line, start plugging in my session. So let's do yesterday. So Thursday, we've got Thursday. So we've got, where is it? 1 p.m. is New York. We have 8 a.m., which is London. And then we have 1 a.m. What is it, 1 or 12? I think it's 12. 12 a.m. Asia session. Okay. So this is what we're doing. We mark up our session highs and lows. Boom, session highs. Boom, session lows. Okay, cool. Then we do the exact same thing again. London session. Boom. Okay, London highs is right here. Boom. And London lows right here. Now already I can see straight away, I can see that, okay, cool. Price has already manipulated these lows. That's very significant for me because guess what? I'm going to be pushing up. I am then going to have a look and see, okay, can price hit the session highs? So in this case, price decides to push up. It hits these session highs and it continues to push up. Guess where it's going to go next? It's going to hit these highs. Okay. And so this happens day in and day out of the market where price will always session highs and session lows is probably one of the most strongest confluence for me because this is what tells me where the market's heading. As you can see, it manipulated these lows, these session lows, and it decided to push up and target these highs. So London session highs and obviously then Asian session highs. Because this was in London session lows, because this was during London session and manipulation happened during London session, in New York session, I'm just going to scale in and look for my other confluences. Let me show you another example. So let's do Wednesday. Let's have a look at Wednesday and see. So Wednesday, 1 p.m. Again, I like to draw these out. I know there's indicators out there that will make it easier for me, but I don't like to be lazy. I like to draw things out. I really hate indicators. Just messes up the charts. So in this case, okay, same thing. Boom. Asia session highs. Asia session lows. London highs. London lows. Boom. Okay. As you can see, we actually manipulated Asian lows, but we also manipulated, that's not London lows. Sorry. London lows would be here. We also manipulate London lows right here. So over here, we have big manipulation. I don't know what the hell happened on Wednesday, probably some sort of news or something, but we had big manipulation here. And so look what happens. Price manipulates here. And then guess what happens? Price pushes up. Now, in this case, it didn't get to reach the high. It did reach it later on, as you can see over here. But obviously, price had more room to manipulate these lows right here. But it ends up, regardless of what happens, regardless of what's going on, these end up getting hit right here. And then these highs just got hit right now. So these manipulations was good. Obviously, there was more manipulation during the process. However, during the session, you can see that these targets still gets hit no matter what. So session highs, session lows are very, very powerful. Very, very strong. It might not get hit on the same day, but it will get hit somehow. Let's go back one more day as well. Just show you one more example. Oh. Let's go on Tuesday. There we go. Okay, Tuesday, again. Boom, session lows. Boom, session highs. London session highs. London lows. Okay, in this case, again, have a look at this. During London session, we manipulated the highs. Where does price want to go? It goes down. Okay, in this case, again, it doesn't get to reach these lows. Well, London lows didn't exist at the time. We didn't get to reach this low during that session. However, look over here. We end up taking out these lows anyways. So session highs and lows are very, very significant. It doesn't happen every single day. However, it does get hit. Those liquidity levels do get hit. Those liquidity levels do get taken out. And so it's all about just knowing those levels. It's very important to understand those levels and how powerful they are. So instead of just drawing out every single liquidity high, liquidity lows, you want to be able to target the session highs and session lows as well. Those are going to be a lot more stronger, a lot more powerful compared to just trading highs and lows of whatever time frame you're looking at. Okay. Next, what we're going to go is we're going to talk about the highs and lows of the hourly. Okay. Again, very, very strong. Okay. Let's say on the hourly time frame, we're on an uptrend. We get a little bit of a manipulation right here and price starts to go down. Okay. Now, this is very, very important for me as well, because let's say my session lows are all the way down here, but we've got lots of liquidity levels right here. Okay. What do I do in this circumstance? Well, I can have my full TP over here, my full target right here. However, what if price doesn't go to that level? Like I showed you in the last example, price didn't get to hit that level during the session. So what do I do in that circumstance? Well, we have something called hourly highs and lows. Now, this is also as strong as session highs and lows. Not super strong, but they're still significant for you to place a trade and target. Again, what are these? So let's say these are the lows. 1, 2, 3, and 4. Now, again, I like to use this as, imagine you had two magnets, okay? Now imagine you are a magnet, and I'm actually going to try and get the image up right here. There we go. Let's say there's a magnet on each line, okay? Now, let's say sell orders have just been activated. Okay, sell orders have been activated, price is going down. Where is it going to go? Well, it's going to go to this first magnet right here. Once it's taken out this magnet, where's the next magnet? Well, if you are a magnet and you've just taken out another magnet, you're now strong, right? We now have more buy orders, or there's buy orders in here as well, but we also have sell orders coming in as well. A lot of people stop losses, a lot of buy orders, stop losses are all over here as well. Guess what happens? Price decides to go and take out these lows. Boom, that got taken out. That magnet got taken out. And then what's going to happen next is going to do the exact same thing here. Boom, that gets taken out. Then this magnet, boom, that gets taken out. So these highs and lows, I like to use the theory of magnets because price gravitates towards the closest magnet. Okay, we had a lot of buy orders right here, but look how far it is when price is over here. Where do you think price is going to go? It's not going to go here. It's going to try and take these out, this magnet out first. Then it can go and take out all the other. So let me show you an example. Right here is the perfect example. We have lows right here, lows right here, lows right here, and obviously lows right here. Okay. Now, look at what price did. Okay. Price went up, manipulated these, pushed down. Boom. Price decided to go down. Okay. Manipulation, price just changes direction. It goes towards the downside. We are now looking at a lot of sell orders taking place in this area. Where does price go to? Well, look, first target, boom, right here. You can see that this level was quite strong, okay? Very, very strong. So this is quite a high, very, very strong liquidity level. Then look, this level, boom, taken out. Again, a lot of price rejection right over here. Then we finally get the manipulation over here, which causes price to go up. So this liquidity level, this magnet is still there, still valid. Okay, these we can get rid of, but this one's still valid. So price maybe in the future might want to come down to this level. Do we keep it on there? We don't have to. We can ignore it for now because clearly price has decided to push up. But then even if we look at it from the other perspective, price decides to push up. Well, guess what? We got a high right here, 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 and then obviously a high right here. Okay. Now look, now this is actually a really, really good example because if you have a look, we have a high right here, but look at the distance between this high and this high. Okay, quite a big different distance. However, look at this. 1, 2, 3, 4 are very, very close to each other. So when I see stacked up liquidity like this, I like to look at it as, okay, all of this most likely is going to get taken out. Every single one of them is going to get taken out. Why? Because they're so close to each other. The closer the magnets are, the more easier it is to get taken out, right? If I had 4 magnets close to each other and I'm a magnet and I'm going closer, I'm most likely going to attract all 4 of them in one go, rather than this one's right here and then this one's all the way up here. Okay, so when I see this, I'm like, okay, we can easily target here, but we have 4 levels of liquidity over here. So for me, that's like, okay, green light, we should target these 4 levels because most likely price is going to want to get to that level and take it out. And guess what price does? It takes out all of this in one go and then ends up taking out that liquidity. And guess where it's heading towards next? Boom, right here. And I'm super, super confident that price is going to hit this liquidity level, which is 4,500.550. Okay. So that is also very, very important. Okay, very, very important that you understand that. This is the hourly highs and the hourly lows. Okay, we can continue to look every time there's a manipulation, like right here, boom, manipulation, price decides to push up. Where do you think it's going to target? Well, boom, 1, 2, 2, 3, 4, right here. And obviously we've got all of these as well, but let's just say we're using this leg right here. Boom, look what happens. Price takes this out, then takes this out. Why would these two get taken out in one go? Because look, they're very, very close. So most likely price wants to take these out in one go. Then it comes down, right? This wasn't as strong as it wanted it to be. Price then comes down and then pushes right up to finally take out that last liquidity. So like I said, they will get taken out. These levels will get taken out. That's why it's so important to mark up these highs and lows of the hourly. It's very, very important, okay? So when you're on the charts, make sure you understand we've got session-based liquidity and now we've got hourly liquidity levels as well. Now we also have another one, which is the daily highs and lows, okay? Now with the daily highs and lows, I like to look at it as key levels, okay? So if we go on the daily, we can see that we have this daily high right here, boom, which is very, very strong. Now, because we're on the daily time frame, this one's most likely going to be a very, very strong level. Okay, so this is daily high and this is daily low. Now you can see that this candlestick is very, very important because we just manipulated these lows. Guess where price is going to head towards is those highs. So again, daily highs and lows are just like session highs and lows where, okay, if a daily low gets taken out, most likely that same daily candlestick, those highs are going to get taken out as well. Okay, again, another example right here. I can see that this daily low was manipulated. Price decides to manipulate it and it starts to push up. Okay, so what am I going to target? Well, if I was a swing trader, obviously I'm not a swing trader, but if I was a swing trader, I would target those highs, which obviously price hasn't got to yet. However, it's going to be very, very strong for price to get to that level. Why? Because daily highs and lows are also just as important. So these are just concepts that you should understand. So when you are in the middle of a trade and you don't know where to target, this is what you can do. I could show you more examples. We had manipulation. This gets manipulated. This candlestick gets manipulated. Where do you think we're going to target? Is that same daily high, which then it gets hit. Boom, like that. Okay. Show you more. Over here again, look what happens. Okay, manipulation. We get a whole load of manipulation right here, but we got manipulation right here. Boom. Guess what happens? Well, we actually have quite basically equal lows. Manipulation. Where do you think we're targeting? Well, we're going to be targeting that high. Now, in this case, we can target these daily highs, 1 and then 2. We have 2 targets. Both of them gets hit. So again, dailies, just like the hourly, obviously different time frame, a lot more stronger, but those are going to be the forecast of where we think the market's going to be going on a longer period of time, okay? Because as you can see, the daily time frame we don't like to use. I like to use the daily time frame to see, okay, what's the overall picture of what the market's doing, and could we possibly target something else? So, for example, if I'm looking at, okay, what's happening this week? Okay, we got manipulation here. This week we possibly could be targeting these highs. It's Friday today, so we didn't really get to hit it, but we got very, very close to it. So so what we've just covered so far is we've covered session-based liquidity, we've covered hourly liquidity, and we've covered daily liquidity as well. Now, there is one more. I think I missed out on the list, but there's low resistant liquidity as well. So we've got high resistant liquidity, which is what I showed you on the daily. Then we've got low resistant liquidity as well. So this one, I like to see it on the 5 minutes specifically. Okay. So let me actually mark up an hourly high real quick. Okay, these highs right here. Okay, so we got these hourly highs right here, which is pretty strong. Now, if I go into the 5 minutes, you will notice, this is actually a really, really bad example. Yeah, let me try find another hourly high so it makes more sense. Okay, this one looks better. This one looks a lot better. Okay, cool. So you've got this hourly high right here. Obviously, price has manipulated these lows, these candlestick lows. And so therefore, price is deciding to go up. But let's say now, we're obviously on the 5 minutes. Okay. Now, what if price doesn't hit this level, right? What if? Well, if price doesn't hit this level, we have something called low resistance liquidity. Okay. Now, this is a game changer because this is what's going to secure you as like more positive trades. Okay. I use this a lot all the time, and it helps me secure trades even if I catch the smallest move, I still catch something. It's better than nothing. And so obviously this will be my overall target. However, we've got low resistant targets, like for example, these highs, these highs, these highs, and obviously these highs as well. Okay, and so what's happening is now I'm giving a chance for myself to win and give myself a greater advantage towards the market. Because now what I can do is I can have multiple TPs. Let's say, for example, I entered off here. Boom. Okay, stop loss over here. Boom. My overall target can be all the way up here because obviously that's the hourly, which will give me a nice risk to reward ratio. However, this could be my TP1, TP2, TP3, TP4, TP5. Now, during that process, guess what I'm doing? I'm giving myself a greater chance of collecting more money. Boom, collecting more money, collecting more money, collecting more money. This gives me a greater chance. Let's say price decides to not hit this, but hit this level instead. I've still secured as much money as I possibly can. I've squeezed as much juice out of the lemon as possible. That's the aim of the game, right? So that's why low resistance liquidity is also just as important. So I know we also have high resistant liquidity as well, which is obviously on the daily time frame. Low resistance liquidity is also just important. Now, are they strong? Yes, they are strong, but are they going to be my overall targets? No, they're not going to be my overall targets. They are going to be targets that I use to secure. Let's say, for example, the market decides to slow down a little bit. I can use the 5 minute low resistant liquidity to give me hindsight. Okay, cool. Maybe this level could be kind of significant at the time. Therefore, I'm just going to close my trade. And it gives me that room to close that trade rather than holding a trade and holding the markets, holding whatever the market wants to do. And then I'm kind of screwed. And let me actually show you an example of where the market doesn't actually get to hit that hourly low. Okay, let's do this right here. Boom. We have an hourly low right here, right? Market's going down. Everyone believes that we're going to hit these lows, but obviously we can see on the hourly, it doesn't hit these lows. But guess what though? We can still make money. Okay. As you can see right here, we've got a bunch of liquidity. Boom, one. Okay, stacked up liquidity over here. I'm not even going to draw them all out. Stacked up liquidity over here. Boom, a whole bunch of liquidity over here. Again, these are all low resistance. I'm not going to draw all of them out. I'm just going to draw the ones that look very, very important. Like over here, again, a bunch stacked up liquidity. Boom, right here. Again, stacked up liquidity. Like we've got so many targets within this leg. And then price decides, okay, boom. This is where price decides to slow down. As you can see, that is a low resistance liquidity. Price decides to slow down. Now everyone's targeting here. We've got a lot of buy orders right over here. However, these buy orders do not get activated. Why? Because the market was like, we're gonna get up, we're gonna move on this 5 minute low resistance liquidity. That's why low resistance liquidity is important. Market size, okay, you know what? This level is actually significant. We don't want to go too low. We've just activated these buy orders. We've activated these buy orders. We've activated these buy orders. So many buy orders have been activated. Price is like, okay, we've got a lot of buyers now. Let's change direction. That's what it does. Changes direction. It starts to go up. Okay, that's what it starts to do. And then again, obviously the hourly highs we'll be targeting here, but guess what? We've got all these low resistance liquidity that we can be targeting, that just in case price doesn't get to hit that hourly, we are giving ourselves as much advantage in the markets as possible. That's the aim of the game. We want to give ourselves greater edge, greater advantage towards us and the markets. Because if we don't, what's going to happen is we're going to be targeting a level and price might not go there, which is not our fault. And it's not the market's fault either. It's just we didn't have an advantage of, okay, we have multiple targets. And that's possibly why you're going to be losing trades. And we don't want to lose any trades here. We want to have a great advantage of trades. Because even if one TP gets hit, that's better than having none get hit. Because you're chasing such a high target. For example, like these lows was such a big distance compared to where we started, where that reversal happened. And so, yes, it would be nice to get this kind of trade. However, unfortunately, it didn't get to go to that level, but you would have still be able to secure because of low resistance liquidity. Okay, so we've covered session highs and lows, which is very, very important. One of the main confluences I use. Then we have hourly highs and lows, which again, these are targets where I usually is like an overall target. Then we have the daily highs and lows. Again, this is my overall targets. Those are where I'm like, okay, this is what I'm going to be targeting. Then we have low resistance 5 minute liquidity levels, highs and lows again. This would be my mini targets, my targets where like price could reverse from these levels, but I'm just going to keep an eye on those levels. They're not going to be my holy grail levels, but they're going to be levels where it's like, okay, they could be significant. Have an eye on them. Okay. Last but not least, we're now going to cover something called fundamental highs and lows. Okay. Now, fundamental highs and lows are also very, very important because that's where news likes to do manipulation. Now, news occurs quite a lot, okay? We have a lot of red folder news. Let me actually go on Forex Factory. So we got a lot of red folder news. So today, let me actually refresh this. Okay, today is 9th of January. And as you can see over here, we had okay, we had unemployment rate. Okay, we had NFP basically. Okay, NFP Friday at 1:30. Okay, so if I go to 1:30, you're going to see manipulation at 1:30. Let's have a look. Let's go at 1:30. We put a line at 1:30. So 1:30, boom, right here. Look what happens. 1:30, we get manipulation. Boom. Right here. We manipulate these lows and then we go up. Okay. This is also very, very important. If you are a trader, you need to be able to understand that fundamental news is significant, okay? Fundamental news is going to manipulate a low. So it's very, very important as a trader, it's very, very important for you to understand that. So when you see red folder news, we're going to be talking about red folder news later on as well. But when you see a significant news in the markets, red folder specifically, there is going to be manipulation. Okay, this was one today, on Friday. There is going to be manipulation on this day. And this is what happens. These lows get manipulated, price go up. Why did this happen? Because price wants to fake out, give the sellers a move, and then it's going to go to the direction it needed to go in, which was up. Everyone knew it was going to go up today. We had so many reasons, right? So many orders take place for price to go up. Right here, liquidity, boom, liquidity, boom, liquidity. So many orders, price was meant to go up on an uptrend. But guess what? Price had to manipulate first, take out a few of these lows. I think we took up to here, these lows, and then price decides to push up, okay? I know the chart's getting a little bit messy. Now, that's why fundamental news is very, very important. Now, there's a few fundamental news that are very, very important. I'll quickly just run through them. You got CPI news. Okay, let me actually go back. So we've got CPI news right here. Obviously, this is not USD, but we've got unemployment claims, which is very, very important. As you can see, red folder. We have PMI news. Again, very, very important. 3 p.m. Look at this. 3 p.m. on Wednesday. I can guarantee you, 3 p.m. Wednesday, we had some manipulation. Let's have a look. 3 p.m. Wednesday. Boom. Okay, look at that. Boom. Manipulation. Price manipulates these lows right here. Price manipulates these lows. Price goes up. Okay. This happens regularly. Okay. When you start to notice this, things will start to get easier. You start to realize, oh, hold on a minute. This is just a manipulation. Price is not going down. It happens all the time on fundamental news. We always get manipulation. Okay. Every time there's a red folder, there is going to be manipulation. There is going to be a low that will get taken out. In this case, two lows got taken out, and then price decides to push up and then take out the highs. Again, which highs? The hourly highs. Okay, it's just this liquidity concepts are so simple and they're so powerful. If you can start to read this, you will become so good at trading. And this is just based on just how many did we cover? We covered 5 concepts, right? Based on liquidity. So I'll repeat them again. So I'll write this down. We had session highs / lows. We then had hourly highs / lows. Okay. Then we had daily highs / lows, which is high resistant liquidity. Okay. Then we had low resistant liquidity, which is obviously on the 5-minute time frame. And then lastly, we had fundamental manipulation. Okay, this happens on red folder news. Okay, very, very important. Take these notes down, learn to identify them, get used to it. The most important that you'll see me use is definitely these session highs and lows. Very, very important. I use these quite a lot. You're going to see me use the hourly highs and lows as well to get some targets. Let's say session highs and lows are not really giving me a good room to trade. I'll then start using the hourly highs and lows. The daily, I don't really use them as much, but they are very good for hindsight to understand, okay, what the direction the market wants to go on today or this week. Low resistance, again, I use this quite a lot to give me multiple take profits. If you see my live trading that I do, you will notice I do this. And then fundamental manipulation, red folder news. Again, I don't trade red folder news. However, if I was looking at the markets, I will know we're going to get manipulated. And so it'll be very interesting to see what the market does. So for your task today, what I want you to do is I want you to start marking up session highs and lows. Okay. I want you to mark up session highs and lows. I want you to also mark up some hourly highs and lows that you think is going to get taken out. I want you to have a look at the daily highs and lows. Don't have to mark them up. But the main ones I want you to mark up is session highs and lows. If you want to, you can mark up the hourly highs and lows as well. I recommend you to do that. Don't go too far. Like, don't start looking at last month's highs and lows. Just a few hours behind. Now, low resistant. I spelled that wrong. I am bugging. Low resistant liquidity. Again, this is 5 minutes. So let's say we're forward testing. We're looking at the markets. Mark up some low resistance liquidity. See if they get taken out. See if it gets hit. And then the fundamental manipulations. Whenever there's a red folder, have a look at it. Have a look at, go back in history, go back in time, and have a look and see on every single red folder. Okay, what liquidity levels got manipulated? What happened? Where did they get manipulated? How did it affect the markets? How did it change the markets? Did it change directions? This is a big manipulation right here. Boom. I can tell that was definitely some sort of news, some sort of red folder right here. Boom, manipulated. Boom. That's why the market pushed, reversed. So if you can do that, you start becoming a professional and you actually start to identify and pattern recognize, that's all you need to do, pattern recognize. Once you do that, trading is going to become a lot more easier because you'll start to know exactly where to target. You'll know exactly where the manipulation is going to happen. You know exactly where market wants to go. If you know where market wants to go, all you have to do is hop on the bandwagon and join where the market's going. That's all you have to do. Life becomes so much more easier when you start to understand where the market wants to go rather than trying to predict where the market wants to go. If you know where the market wants to go because of certain levels, you are going to be much better in that. So make sure you leave a like in this video. Make sure you turn that bell notification on. I record every single day, upload at 8 p.m. every single day. I think we're on like day five already, and we're already deep into the trenches, which is really, really good. Make sure you comment down below every single thing you've learned. Whatever you've learned, comment down below so it helps other people as well. And I'll see you tomorrow.